The Dow has managed to post its sixth positive session. Of course, the street is now eyeing what the jobless claims is going to be and what is the commentary going to be, the Fed, or rather the move from the Fed thereof. But just take a look at what the global picture has been like overnight, because it's been a decent handover. We, of course, are following our own trajectory. There's been a lot of earnings-driven momentum as well that the global markets have seen. And just to put it into perspective and give you a glimpse of what US has done, it's not been all that bad. So the Dow managed to eke out a decent gain of about 0.5% even overnight. While yes, it may have been a pause for both the S&P as well as the Nasdaq overnight, but the momentum for those markets looks far stronger.
It's local versus global. Locally, it's FII selling. The market construct is not bad. It's not exciting, but the market construct now is threatening to become weak, given that we've got very little momentum which is coming back despite strong set of global cues. Markets in isolation are telling you two things. One, the anxiousness, the nervousness, the preparedness for the election event, I think is evident looking at the way how VIX is moving up. In India, the reversal is not very sharp, but in terms of commitment, in terms of the small cap price action, in terms of the mid cap price action, given that we were in a decent phase of momentum, let's say 8-10 days ago, that momentum has got challenged. It has reversed in some pockets and it may remain like that. The problem which we'll discuss for the market for the moment, I think, is one and only: why are FIs selling? How much have they sold? And what would be the impact of that? For me, that really is the single biggest chink in the armor, so to speak, or the biggest cross which is really disturbing the market rhythm. So it's not global cues, it is not Fed, it is not geopolitical tension, it is pure vanilla FI selling which is leading to VIX uptick in volatility and which is jamming the market at higher levels.
Yeah, that's clearly the big talking point. If you look on a month-to-date basis as well, the kind of number that we've seen when it comes to the FII selling. So clearly seeing that shift from India to China to a great extent. And in fact, let's talk about our own markets and how we shaped up yesterday. It was a pretty flat close, so nothing to really shout home about. It was metals, auto that snapped the 3-day losing streak. But banks continued to remain on the soft side. And Nikunj, just taking home or driving home this point with respect to the FII sell-off, a large part is that China is relatively outperforming.
That is one of the factors why FIs are selling, and that is evident in the way outperformance in, let's say, Hong Kong and the Chinese market seems to be coming. I think if you frankly ask me where the bit of disappointment has come is that 2023, you don't have a big impressive number now, at least on the FI front. Foreign institutional investors, after almost like a year out in 2023, they've not come back, and they've not come back at a time when global cues are strong. They've not come back at a time when, in general, the earning momentum and the macros are not bad at all. So the FI selling, could it be sectoral rotation which is moving into China? Is that coinciding with the big election event? Or that purely could be a play where a little bit of skim from the top at the current valuation is more like a global phenomenon. Very difficult to attribute one single reason. The problem with this kind of a ramp up FI selling is that if it continues for next couple of days, then markets will find it difficult to digest. 5,000-6,000 crore on a daily basis is something no market, at least a market like India, will struggle. Yes, you've got a brave FI, DII front which is continue to really shoulder the market fall. But if the supply is so large, and even if it is getting digested by domestic institutional investors, you may not see the market going anywhere at all. And for a trader or for an HNI investor, when you know that this kind of selling is coming, you do not want to commit more capital to the market. See, we are not in that phase of the market where you would say, okay, markets are cheap, you want to buy more. We are not in that phase of the market where you would say that I would like to be contra. You're not in that phase of the market where you can be completely ignorant to what the election risk is. So in this market, when typically FIs, they sell, it sours the sentiment. So either that selling has to stop. See, a little bit of selling here and there is okay, but 5,000-6,000 crore on daily basis is like a problem now. So either that FI has to neutralize, or markets have to become attractive, or the event risk has to go behind us. Because in the month of May, we are almost in middle of May now, May middle to June, only 3 weeks are left. And before, for anyone to really come out and increase commitment levels ahead of that event, and when FI selling is that large, may be difficult.
And you know, in times like this, when you have the VIX being the biggest moving part, the kind of intraday volatility one is seeing, and the kind of disconnect that there is at what the index is, what the index constituents are doing, and then completely separate stock specific what's happening within the mid and small caps, right? So you wonder as to what should be the strategy in these uncertain, volatile times.
See, VIX is not going to sustain here. 20% VIX, it's extremely overbought. It's not going to sustain here. So I think a crack in VIX and uptick in the at least short term in next today or tomorrow, maybe from the days, maybe after a flat start we pick up or we recover from the day's low, I don't know. But I'm saying that a dinky bounce is around the corner. VIX is not going to sustain at these levels because historically it has not sustained. These levels are seen when 10-day stretch on the VIX has not even happened during COVID time. And situation is not like COVID. So this is not going to sustain. So you are in for a dinky bounce. After that, if you are really near-term watcher, you're going to take it from there. But today, tomorrow, if you're short, don't go short. Wait for that bounce and then reassess the pitch, so to speak.
Okay, that's the view coming in. Reassess the pitch when it comes to your strategy towards the markets. Now let's take stock of earnings because it is a very busy week when it comes to Nifty 50 numbers. Lots that's due today, but a lot that took place yesterday as well. Heavyweight from the engineering space, L&T, came out with their numbers, and overall they said that there's a 10% order inflow growth and that they will see elections as well as monsoon impact their numbers. It's been in line. Ditto when it comes to TVS Motor. There's some new launches lined up and 1,000 crore rupee capex plan in the works. You also have Tata Power. They're looking to hike their overall capex plans. And then today, the likes of SBI, Asian Paints, BPCL, all will be in the spotlight.
Okay, so let's start with L&T and Tata Power. Nothing exciting in those numbers. L&T numbers, guidance, or perhaps what they've indicated for the quarter gone by, market was not expecting anything large, anything big, and there is no surprise. Now L&T, of course, because numbers have not been that strong, the terminal value for L&T in the near term based on the earning assessments would go down slightly, which means that in the near term, rather than big upgrades, you went for marginal cuts. But that is like a, that is more like a result adjustment, more like a swing event. It could be anywhere between 2 to 3%. Hard to fathom what happens after that. Second, for those who bought into L&T, they bought on the assumption that this is one pure play on the way how the entire capex and the infrastructure economy is moving. That thesis does not change. But yes, the freewheeling move in L&T which was there, I think that is getting arrested. L&T now has to really face the heat of competition and what is happening in terms of the global environment, which means that best of the earnings upgrade for L&T are behind us, but it will continue to grow. It is like the go-to stock for institutional investors and for ultra HNI investors. So I think nothing changes in terms of that positioning. Tata Power, well, you take out all the extraordinary, and which is what is important, Tata Power, nothing very sparkling about those numbers. So you are likely to see a very big charge in this stock. The stock has already seen a run up from 200 to about 400 rupees, but nothing was expected for the quarter gone by, and nothing is expected in next 2 quarters from Tata Power. The factors at play in terms of where the Section 11, Mundra, that is at play. Renewable business will pick up. So there's nothing new which you would say is interesting there.
Right.
If you like this video, then like, share and subscribe to ET Now.